All right, Doc here from North America on a different computer today. Let's see how this all works. Let's see if we can tune into there. Let's do this at the same time. And what we're trying to do is we are trying to make sure we're seeing some picture somewhere. I think we are. I think I see something, or do I hear something? I I do. I hear me.
I see something.
I hear me. Yes, I do. Okay. Let's see. What do we got here? Can I see me moving anything around? But at least I hear the sound, and that's a start. How about that action in the currencies this morning? Now let's see if I can move that down somewhere. Does that show it? No. Oh, here we go. Maybe this. Let's see. Okay, let's see. Multiple adapter. Let's see if I move this over to somewhere. So it's a dark screen. Anyway, hi Doc. Oh, maybe you guys can help me a little bit. Be able to get the charts back up on the screen. I've got JForks downloaded. Everything's good. It was very easy to put the Manhattan indicator in. And how about that Swiss? The way it's moving this morning, moving down. Well, actually, it looks a little flattish at the moment. More of the action the last 2 days. And let me check my Skype display capture. Let's see, you went live without picking the screen to show. Oh, I thought I did pick the screen. It's still highlighted. So maybe if let's see if I just clicked on it again. Let's see, look preview. Let's see, display capture. Display capture. Display capture. Screen preview window preview full screen. Let's try that. Which one is this? This is the Dell. This is the Samsung. Oh, I think I got something there. Maybe this is going to pop up. I think we're seeing something there. I think I've got something. You might be seeing it coming up on the screen in a few seconds here. Yeah, here it goes. Let's see if it popped up on there. It's up on the top screen now. There must be one more button I must push. I still see a black screen on mine too. Matter of fact, it's dominating the top screen now. No, I see. It's not moving with it. Somehow or another, I've done something wrong here. Let's see. Escape. There's escape. Okay. It says transition, quick trans, cut, fade. Display capture? Is that it? Is that what you said? Display capture? Let's see. At the bottom of the source, click on the plus sign, and it should be among them. Yeah, that's what I just did too. And let's see. Let me just see what it says here. Display capture. I've clicked on that. Okay. Oh, how about now? That looks familiar. Let's see. Okay. No, that's not it either. Boy, are we close. Anyhow, I'll talk about the markets, and we'll talk about how we're going to get these charts up on the screen in a few seconds here. I'm just waiting to see if that pops up on the screen. What we're seeing here is, I'm really convinced, as I think I said it in the title yesterday. I think what we're seeing here is that I think they're gonna wipe out the zero bonds across the planet. Display capture is the one. Let's see. Let's click on that again. Hit the plus. Display capture. Add existing. How's that? Is that cool? Create a new one. Or create a new one. There's that. Okay, so default. Seems like it's up there, but it's not. At the same time, there's two screens. That's what it is. Up on the top one. Can you hear me? Hear me? Yeah, so I'm seeing an outline, what I usually look at on the bottom screen. Everything is in there, and it's displaying the J4X, but it says what does it say there? It says property for display capture. Okay, and then let's see, display capture, like that maybe, primary monitor. How about now? It still looks like it's trying to input it because it's got a big red line, or it's boxed. Let's see, set display order full screen. Let's see what we got here. Preview, look, full screen window screenshot. See if that'll do something. Now I've got a blue line too. All right. If I go to plus again. Images, scene, video, window capture, existing, like that. I know we're real close to doing this, not being live here. So at least we have the sound. Maybe I need to move that? If I go like that. Maybe it's because I'm showing two screens. Now I'm showing even more. Let's see. Preview scaling. Full screen. Let's see, which one is it? The full screen on the Dell. That's what it is. Oh, now it's down on the Dell too at the same time. We're lost in here still. It's a button somewhere in here. We should be able to get it. Okay, so got rid of that. I wonder if I get rid of that up top there. Escape. Huh. Anyway, traders, the way I'm seeing it, see, just keep talking with the guys. I will. All right, I'll keep on talking with the guys. I'm thinking this is what we talked about yesterday. It seems like it's really happening today. In other words, we talked about what we thought could happen yesterday, and it is happening now. We can see that. And that is, there's a good chance, I think we're going to lose all the zero. One of the fights of inflation, I think of it this way. What can the Federal Reserve and the leadership in the United States say to the rest of the world? They're seeing inflation. They know inflation needs to be fought. So what they're probably saying is you're going to have to go to zero. You're going to have to lift up beyond zero interest rates. So in other words, the Bund in Germany and so forth, all that stuff should be moving up right now. And once we get the screen share working right, besides the sound, more than likely we're probably going to see that the interest rates across the planet are starting to lift with the American situation. And then so what they'll do is they'll start to move in lockstep. And so notice our interest rates have dropped the last couple of days instead of risen when the Federal Reserve said they're going to raise them. Well, obviously that's what that's all about. What they're doing is they're going to probably get the rest of the world to move in the same direction. So in other words, they'll go from, like, the Bund now is what, a quarter point minus. Maybe it'll go to 1%, something like that. They'll start paying that, and then what they'll do is they'll start liquidating their bond holdings at the same time. And so they're going to start pushing this stuff out into the open market. And then what we'll see is a volatile marketplace again, much more volatile than what we're seeing, over the last 6-7 years. Minus obviously, certain circumstances per country that has a problem at a given time, but more than likely that will be the answer to it all. So I'm thinking that's what we're going to go through, and that's why I think you're seeing the dollar being sold off, and you're seeing the currency pairs showing strength, and that makes total sense to me. Let me just double check my Skype on the other machines here. And so I see display capture. I did click on display capture. Let's see. Oh, I see. I've got like 3 of them now going. I say this window capture. So what do we do? It's like Maybe that's the one. Was it that one? No, that's not it. Let's see. So if I maybe if I get rid of these and start over again. I know. Let's see. So full screen, remove. Okay. Yes, that's removed. There we are. And we go like that. And we do the remove again. We'll even I'm going to remove. Yes. Okay. Now we have our. Oh, okay. Here we go. Let's see what that does. I think we might have done something right. Let's see if that does something there. There we go. See that? Doc can talk and do technical and do our tech work at the same time. Who says you can't teach an old dog new tricks? There we are. All right. So now we've got one of them going. Let's get Chicago Quant up there. So it looks a little different than the other computer, but that's not too bad. Okay, so if we take this and move this over, like so, now we go to here. Where's it at? Right there. There we go. All right. Now we're cooking with gas. All right, and so let's get that up there. There's the Swiss. You can see the Swiss on the J4X there. How about that, Janos? Who says you can't teach an old dog new tricks? All right, there we go. I can talk markets and do programming or settings. I can do settings and that simultaneously. All right. But yeah, you're right, Janos. I could use you on Monday. We can go through this and make this thing much better. So, and have a cup of tea in my hand, sipping it at the same time. Talk about an old programmer. All right. Let's see what we can do here. So let's move this over a little bit more. See how it looks on the screen. That looks pretty good, actually. I think we're going to be able to get both of these up on the same. This is going to be a little bit better than the other computer. This is a very powerful computer. I have it parked on the side, just sitting around doing nothing. So I trade off of it on with one of my platforms that I use once in a while. Okay, so now we can see that. You can see both charts on at the same time. Does that look right? Yeah, it does, doesn't it? I think we're seeing both of them very well. There we are. Let's see how it looks there. And you can see on the Chicago Quant, we've got the Swiss also doing the same exact thing there. You know, doing the moving down. You see the, you know, now what is that? Okay, yeah, so it just happens to be candles on that one. I'm not sure why we have candles on there, but that's all right. And you can see here the red dots. You see it breaking down here. And you see it over here on J4X, the same situation. The red hinky bars. You can see the white line pierce the fast moving, the slow moving stochastic. And what else we got going on there? All right, so that's the action we're seeing here this morning. And so what we probably should see, let's go over to the Swiss, not the Swiss, I'm sorry, let's go over to the Euro. Look at that, it's like it's collecting up my favorites. I like that. Now here is the Euro. And you can see here, you know, it's moved up. It's a little sloppy here this morning on that one. Let's widen this out so you can see it better. You can see just a little down, but you can see the strength that we had here on the J4X right there. And you can see, you know, the white line bounced, turned up really well. And wow, you know, just that's the way we see it. You know what we should do is we should try to tune in the German Boon, see what the German Boon is doing, and see how that is going, because that will probably be a tip-off right there alone, just looking at the German Boon and seeing what kind of action they're getting out of that, because that's going to be the lead. That will be the canary in the coal mine. If interest rates are going to go up and they're going to dry out this, it's time to dry out the zero or the minus bonds across the planet. That's what it comes down to, and I think that's what we're going to start to see here. All right. I see Marcelo up there this morning. Good morning, Marcelo. I am trading undercover. You are flying under the radar, aren't I? I am a mess. That's what I am. One of my computers, the computer that I use normally, the power source died last night. And I didn't think about it too hard at the time. I should have probably just gone out the door. I had a dinner engagement, so I wasn't thinking about it too hard. I thought, oh, I'll figure this out when I get back. But I probably should have gone over to, like a Best Buy or something and picked up a new power source. I'll do that over the weekend. So, yeah, I'm thinking traders need to start watching the local bonds in their countries and seeing how they start to move them. I'm starting to try to go to a, let's see if we can find it here. Get rid of that. I go here. I'm going to see if I can take a quick look at the German Bund. Let me see if we can find that. It's probably on Dukascopy at the same time. Let's see if we can find it. Now that I have a new J4X up, so let's see. I know I used to see it, so I probably have to put a lot of these things in. It seems like you can see here they're slowly filling in. There's a yen. There's a GBP. Let's see if we can find like the gold and the silver and everything we used to watch and the bonds. Let's see. It's a whole new list. So there's South African yen. Interesting. All right, so we'll have to click on a lot of this stuff and we'll get ourselves set up. And then we'll get like, there's light sweet crude. Okay, so that's good. Right there, you can see that. So we've got these things in here. They're just not in the same list because we've been doing them for decades. Let's see. Yeah, see how it's filling up top. Subscribed instruments. I would like to find the Bund. There's let's see if we can find the German Bund. I'm going to go to a different source too, not to torture you all at the same time. What is that? No, that's not it. There's so much data here it needs to be programmed in still. And I guess if I typed it in, that would probably help also at the same time. Let's see, where's it at? Let's find, let me go there. Trading. There it is. Markets, there we go. All right, let's take a look and see where the German Bund is. I'll be able to tell you where I see it. Not there. Actually, there's a 3-month, the 5-year for the U.S. Let's see. No, not there. Normally the Bund is on that page that I'm looking for. Where's it at? Can't find the German Bund. Anybody knows what the German Bund is trading at right now? Just give us a shout. I would assume it's firming up. I'm assuming that's what we're going to start seeing is these foreign bonds really start to firm up in many other. Okay, here we go. Futures, commodities, bonds. Let's see what the bonds show. All right, there's the German Bund. So the 10-year is yielding 0.068. It's up 0.019. I guess that's how that works, right? Yeah. So that's what we're seeing there. Is we're seeing that action where it's moving up. It changed. Yeah. So the cost of it when the bond goes up in value, that brings down interest rates or vice versa? I think it's the other way around, right? Cheaper to bond, higher the rate, right? So the bond's costing more money. That means that the rate is rising, I believe. That's how that works there. All right, so we're seeing a little bit, but I think this is what we're going to really see now, and this is going to be like a whole new. Let's see, the euro. Okay, yeah, the Giannis is there. Euro bond and the Bund. Okay, there we go. We go with that. Let's try that. Let me type that in. Thank you, Giannis. Let's see, right there. Let's see, BUND. BUND. Boom, there it is right there. Perfect. So when the price goes down, like this is doing right here, that means interest rates are rising. And that's you know, and when you really think about it, that would be the answer to it all in the end. In other words, you know, how are they going to raise rates without disturbing, making instability? That's what the word, not disturbing, but create less instability. That's what we want to do. Is well, not me in particular, but that's what the central banks want to do. Is less, you know, they don't want instability, and that's really what it comes down to. And they want steady, consistent. So as you can see here, you know, the price of the bond has been going down. I guess when the price of the bond starts to go up, interest rates are dropping. That's usually the way it goes. But that's with the euro too at the same time. I guess we'll have to watch and see, and I'll have to observe. But what I'm looking at on it is the yield looks like the yield has gone up, and that's what it's supposed to do. And that's the only way we're going to be able to get out of this situation. In other words, they're going to fight inflation. So I would assume the dollar will be weak, you know, for the next, you know, couple of years, or at least the next year or so, or let's put it this way, at least for the next 6-7 months. Because when the House of Representatives flips to the Republicans, you have to assume that then they're going to start thinking that we're going to have a Trump economy again, and I think inflation will go away pretty quickly too. I think that's how that's really going to play out in the end, and that's probably what the whole issue is about to begin with, and that is that most of our inflation, not all of it, but most of it is just through policies. And so that's the problem right there alone. So just changing who's running the government will straighten out a lot of this inflation stuff. And that's how we see it at the moment. On J bond trend, euro bond, excellent, excellent. Yeah, I'll get that all straightened out over the weekend. And what we'll do today is we'll just go through all the products we normally follow. So when we go like from here, we're going to go to the cable. There's the cable. And let's put the cable up on there. There it is right there. And you can see here we're banging against the 50 percentile line for the last 2 days. You know, and as you know, we talked about that. We talked about the idea that the cable, the British pound against the dollar, should get up into that area. At the same time, you can see, you know, J4X is just trying to roll over a little bit right here now, just like we're trying to roll over. See, that's my math smoothed out by the stochastic. That makes this, when you use the dashed line like a zero line, like this zero line right here, that kind of does that right off for us. Now in this case here, you can see it's even dropping faster. We'll have to double check to make sure I have all our numbers right in there. So I'm gonna put, yeah. Okay, it seems like we have everything good from just the way we've been using it before. It was in my memory, and I got to write that thing up over the weekend too, Giannis. I'll send that over to you, so you can have the Manhattan indicator, the Dukascopy Doc Manhattan indicator. That'll be it. There you go. I did look it up. Nobody has anything called a Manhattan indicator. All right, and so you can see here cable doing the same thing. You can see the weekly very firm. Let's see how it looks on the weekly. Right there. Hey Jordan, how you doing? GBP. Oh, what's it? Hi Doc. Took a short trade on GBP USD tonight. Boy, it's quiet, isn't it? It's locked right in on that 50 percentile. What this is? Was it Marcella? Marcella, right there on the J4X screen. I've labeled the tools that we've been using for a while here now. We can make that larger for you. We call that the Manhattan indicator. What it is we're using Hinky-Ashke bars right there. We're using a fast stochastic right here, running against a slow stochastic right there. And you can see the inputs as we highlight it right there. You can see if we go like this, and it says edit indicator, you can see right here, we're just using the fast D. That's all we're using is the fast D right there. Well, we put 5-3 in just in case, the fill in. You're not seeing the other. And the slow stochastic is the 5-3-3 for the slow D period. And that's what we're using. And there's a whole story to it about a bunch of physicists during the Manhattan Project using the mainframe when they weren't crunching numbers for Oppenheimer out in New Mexico. Yeah, we'll have it all rolling along. Giannis is my angel on my shoulder. Great. Oh, that sounds really good. That'll be nice. You'll be able to just click right on it, and you'll have the Manhattan indicator. And what it does is, if you notice, it matches to my work because I use the stochastic in this fashion to smooth my math out. So when you see this here, you can see the characteristics are a lot. Like you see here, it goes through the 0 line right there. That's like when the white goes through the dashed line here on J4X. Yeah. So at this point, we're just watching. One of the old traders I was talking with this morning, I was saying to him that, that I kind of clarified in my head what I was thinking yesterday and the day before, and that is, how else can the world fight inflation? And it may not be long inflation. I don't think inflation is going to last long because I believe most of the inflation is created by policy of this administration. The Senate and the House, not the Senate as much, but the House and the president. And so when he loses the House and it becomes veto proof, then from there, it will, a lot of this inflation will disappear. So they can drag their feet slowly, the central banks, fighting this because they probably know the same thing. And that's usually the answer to it all in the end. That really is. So, what we'll do is we'll just grin and bear with it, just watch it, see how it goes, how the inflation starts to get pushed back down again. But one thing is for sure, I would have to believe that the only way they can convince, make everybody feel comfortable in the central bank community, the Australian Central Bank and the ECB, the European Central Bank, and so forth, and Canadian, and all the central banks, even the Turkish Central Bank, is probably, allow the dollar to go down, allow their currencies to lift, and at the same time reduce the minus interest rate of all those trillions laying around. And then what they'll do is they'll shrink the balance sheet. They probably laid out a strategy how to shrink the balance sheet. That's probably what's going on at this point in time. And that's that's where we are as currency traders. We're going to see that influence leak into all the other areas. Matter of fact, I think I was watching over on the commodities. I was watching we've been assuming any major product that is dollar denominated, is like a currency. So the grains and everything else has been running up for a combination of reasons: inflation, lack of supply, and more than anything else is that it's dollar denominated. In other words, people need to buy dollars, and if they buy corn or short dollars, and if they buy a corn contract that's denominated in dollars, that makes them short automatically against the dollar. And if they short the grain contract, obviously it would make them long against the dollar. Well, a lot of countries are really stuck with all those dollars, and if obviously the central banks, the Federal Reserve in particular, and the U.S. Treasury have our interest rates locked, so you can get punished on some level that we don't see. The Federal Reserve is punishing central banks across the planet for what they call manipulation. Don't ask me how they can define manipulation. I don't think I can even guess that one yet. But they do call it manipulation. And so that's what we're probably seeing, is that now we're going to see that shift. And so that has pushed a lot of commodities up because they try to sell dollars, but if they sell too many dollars and don't hold the amount of dollars that the Federal Reserve wants them to hold, then they're considered manipulating. I think that's basically what it comes down to. So instead, they go out and they buy, corn or wheat or something like that, which means now they need to convert their currency into the dollar to pay for it, or they become short dollars. And I think that's why we're seeing all these high prices in the commodities over the last couple of years. I know it's a bounce shot. It's definitely a bounce shot on a billiard table. I understand that, but that's the way these central banks function. Anyway, there we go. Let's jump over to the Turkish lira. Let's see, where is it at? You'll see the dollar Turkish lira to start off with. They slid into a sell the last couple of days. That's another thing too. I have to get up the fact check spreadsheet. I don't have that this morning. That's another thing I need to get going on this computer. Let's see, where are we at here? And so, let's see. All right, so that's that there. You can see that the dollar Turkish lira is in a sell, which is this is really starting to pan out. We'll see how long this lasts, but fascinating. They found a way to calm their currency down, and that was a nice simple oscillation. So it's a lot better than being up at 18. It's at 13. That's pretty good. That's what the free puts are all about now. And they're a floating free put too at the same time. Now let's go over to the daily there, and we'll put in the, what is that? That is the USD Turkish, let's say, slash TRY. There it is, Turkish lira. There we go. And you'll see how it matches up to the Chicago indicator here, my quant, which is, as far as we can tell, it's the best indicator out there for the last 5 decades. And so you can see here, it rolled over and it got underneath, and you can see here the pressure is on the product the same way. Now from there, we've been following the the euro Turkish lira as the main product to really follow when trying to understand what's going on in the Turkish economy. And you can see it right there. And let's get that up on the screen, and that would be EUR/TRY. There we are. And let's see, here it goes. It's filling in now. And you see how this is breaking down too. It lifted up again. You had it get off of this bounce. It lifted up, started to break down, showing some weakness in here, and then lifted back up, identically to the way ours was, except for ours did not break through the zero line. That's what makes ours the more accurate tool. But if you're going to have to use a public indicator and not my mathematics, well, obviously this new named strategy, the Manhattan indicators or indicator, is basically the best tool you're going to find out there. This is much better than MACD and moving averages and all this other stuff, or a single stochastic too. Much better with that also at the same time. So I'm impressed that we're up and running today. I'm pretty excited about that. I was sitting there talking and doing all that stuff. I feel really accomplished this morning. As we sip a tea again. So from there, we'll go over to the, where we're going to go from here. We'll go to the Canadian and see how the Canadian is doing. And there's the Canadian. You can see it's been in a sell for a bunch of days here. And we'll have to get that fact check spreadsheet going. I have yesterday's, that's all. I think I could put actually yesterday's up somewhere along the line. No, I could do that. I don't have yesterday's filled in. It died with the computer there. But let me see if I can do that. I know I can. Let's see, if I go to sent, I can bring it up. Let's see, where are we? I guess that's it right there, no? The 13th. That was yesterday. So I can put up the 12th, which will give us a flavor of the weeklies. There we go. That's it right there. And let's see what we do here. And if we go like this, you'll see it on this sheet here. And you can see that's the Turkish lira, 17 weeks in a weekly buy right there. And now, let's see, we're going to go over to Canadian now. So let's put the Canadian up there. So that would be what, dollar USD slash CAD. There we are. You can see here, trying to turn up a little bit right there. Let's go up to here and take a look at that. You see we're trying to perk up the same way. You see our white line heading back up to the 0 line. And for us here, this has already turned bullish on that. That's kind of interesting. We might have to tighten this up. I might have adjusted these things. We'll have to find out. I'll have to go back to videos of when we showed it to other people. Let's see. I'm doing some scalping to satisfy my gambling component. I hear you. Too much statistics and best testings are bored. Testing are boring. I hear you. Well, what was it? Jordan was saying he's trading GBP short term right now, and we can. And Jordan, if you want us to throw a short term chart up, let me know. If you want to see it through Doc's mathematics and through the Manhattan strategy. You know, short term trading is like a sport. It's like let's see how the best way to describe it. It's like you know, like football or tennis or baseball or cricket or, you know, Australian, you know, league football, or what do we call it? You know, or any other sport, soccer, you know, or English soccer or English football, rugby. You know, you need to practice, and you need to practice with the indicators that you're going. Remember, when you're short-term trading off the floor, and there are no floors anymore. What happened is, yeah, well, no, you can make it educated gambling, and what you can do is you can put indicators in there that will give you an edge. You know, try to make it like the crap table or counting cards. You can do that. You can definitely do that. You can treat it like counting cards. So yeah, entered a 1 minute chart, 13 and 15 crossover. Well, what we can do is we can show you. I don't follow the 13, but I can show you this. Let's see, because I think, don't we have, Jordan? We have something in there for you all the time, like the hourly. And I keep on saying, you know, I don't like, but we'll show you a 1 minute our work. Where is it at? In here. There it is, right there. No, that's not it. We had an hourly one with, I guess that's where it was, the 963 for gold, because we talk about spatial. So we activate that. And that's an intraday play. So now let's go to a minute chart. We'll give you an example. Marcel, we'll show you through Jordan's intraday play how to do this. Okay, so we go to settings. We're going to go to a 1 minute, which we're not real big fans of. First of all, minute and seconds and hour charts are bad. Okay, to start off with, they're less accurate. We're going to show you that live here. Now let's go to the instrument and let's go to the cash. Let's find cable. There it is right there against the dollar. All right, now this is our math, and then I guess what we did is last time we were doing something that Jordan was looking at before, but he was doing hourly charts and so forth. So now what we're showing you here is, let's make this larger for the moment, and then we can try to play with it on J4X at the same time, like that. So what we're doing here is this. You can see here, when it breaks down below the 0 line, the white line in histogram or go minus, you see the pressures on the downside. You can see when it breaks through it, pressures on the upside. Now, that's educated gambling. Okay, Douglas? No, hey, Douglas, good morning. Marcel, you see that? Bob Volman published. Huh. Well, we can take a look and see what he's doing. But more than anything else is that it's practice, practice, practice. And you can turn it into, like, you can make it like card counting, or you can turn it into the crap table where you set up opportunities for once the dice are thrown, you have the potential to win uh, on the pass line. And if you don't win on the pass line, then you can try to win on individual numbers and so forth, where you can actually make it 50-50. And so where card counting, you can actually, remember, when you're trading, there's nobody stopping you from card counting. Whereas if you do it, at a casino, they're going to stop you. Practice and stomach. Yeah, basically. But you know what? If you do it over and over again, now Jordan is doing something called dual momentum. Let's see if we can figure out what that is. This is what we do on Dukascopy here. This one right here. That was that. Now there's the commodity channel. Now dual momentum. Let's see if we can find dual momentum. So we'll remove this. Oh, I see. We have to go over here. Let's go over here. And we'll remove this. Indicator, channel. Which one's it? Where is it at? There it is right there. So we'll remove this. And see if we can find this dual indicator. Let's see. Dual momentum. Let's see if we can find dual momentum. Add. And then we're going to show you the difference between a minute chart and a spatial chart. Dual momentum. I don't see it here. Data. What's the dual momentum? Is it the one? Is it the, let's see, entered on the 1 minute chart, 13 and 5 EM moving averages. So are the 13 and the 5 the dual momentum? Is that what that is, Jordan? And are you using the 13 against the 5? Is that what you're saying? 200 ticks charts. Okay. Yeah, that's good. I go with the Tesla numbers more. Like 336, 93, 96, 369. I play around with those more. I see Jordan says example, daily stoke and 1 hour stoke. Okay, so that'll be the dual, that's your dual momentum. Okay, that sounds interesting. Well, at least, Marcel, you're right on the right course. And Douglas, is saying gambling is not trading. No, you can turn trading into a very conservative strategy. You can do that. And Marcel, tick charts and contract charts, are much more efficient than minute and hourly type stuff and daily. Well, daily is okay, for the overall momentum. So, and now this is a minute chart. Now look at this as a minute chart, and then, so let's see, you have a daily, so I'm not sure, I guess I'd have to double the chart like the way we do here. Here we have, let's see, where's it? Let's go back to cable for a second here. See cable, this is a weekly chart with an indicator right there, with one of my proprietary indicators. And then this is the daily chart right there with my indicator. So it's running the two together, and then it's based off this. So up in here, and there's your daily chart there, so you can see that. Now, it sounds like, Jordan, you're using a daily stochastic against a hourly stochastic, which sounds very good, because, obviously the daily is going to be the slow one, and the hourly is going to be the fast one, and that fits in exactly with our Manhattan concept. You want a fast one running against a slow one. Are you doing it through J4X? I'll try to emulate it through J4X, if you're doing it through J4X. And for Douglas, talking about trading is not gambling, if you marry options or binaries with the underlying product, it's a true investment. Matter of fact, it becomes like a synthetic bond, paying a much better yield than bonds do, and you have control. Good, good. Yeah, we're I'm pretty experienced on most trading. So let's see. Marcel says only euro against the dollar and dollar against the yen. Yeah, you want to. Well, we can say this. I can honestly say this, that up until quantitative easing back in 2008, you needed to trade what they called the major pair trades, the majors. Okay, MAJOR, major. Number one's the top, the 6 or 7 or 8. In other words, the euro, the cable, the euro against the dollar, the cable against the dollar, the Canadian against the dollar, the Swiss against the dollar, the kroner against the dollar, and there might have been a few other. Oh, did I say the yen? Let me do that again. Euro, cable, yen. Let's see, euro, cable, yen, Canadian, Swiss, and kroner. Okay, they were the majors, and then Australian slid in there. The Australian against the dollar slid in behind that, and then that type of thing. And then once they created quantitative easing, uh, yes, you need tight spreads. So in other words, if you're scalping, you don't want to buy something that's illiquid. You need to trade in something that's liquid. Exactly. Exactly. You have to trade in something that's liquid. But we've found that there are pairs trades now that we look at that that were minor pairs trades that trade like, was it is it you, Jordan? No, 47. We have a trader in here, 47, who watches. Look at this one. Check this one out. The GBP JPY. What a nice consistent tool it is. I mean, accurate, very accurate. Let's see if I can find it. Where'd it go? There it is, right there. I mean, you can see our signals. Sometimes we get into it. We're in a weekly buy here. It gets into a daily buy. It trends really nice. In this case here, it went into a sell, and it was in a sell. It goes down one day nicely. It goes into a buy here. You can see it lifts up, but we're in a weekly sell, so we normally don't take that unless we're using the options. But some of these minor pairs trades, look at the distance between, like the buy signal and the sell signal and all that. It's very impressive. Very impressive. I mean, imagine this. We're in a buy here on a weekly. It goes into daily buy a couple days ahead of time, and look at the wonderful run it has. Some of these minor pairs trades that were not very popular a long time ago are very popular now and very accurate, which is really impressive. In Dukascopy, those pairs have the lowest spreads. Yeah, Dukascopy does fine with the currencies. It does. I've never tried trading the stocks with it, but I'm sure they just do fine there. A broker, to be successful, has to be tight. Yeah, it really is. Douglas, it really is a good pairs. But we've discovered that there are a lot of what was considered minor pairs trades before quantitative easing have become very consistent. In other words, they go into a buy. Sometimes they can last for weeks in a buy. And it goes up and down, but it goes higher, makes higher highs, it makes higher lows. It's consistent. We found, I'm trying to think what other ones are out there that we have people ask about. We have some traders that come in here. A middle-aged muscle. What's he follow? He follows, I'm trying to think, he follows gold and silver, coffee, and I'm trying to think what, meal, soybean meal. I'm trying to think what currency he follows. I think he follows the euro. And, the euro can be, much more volatile. The yen can be much more volatile. And some of these, what was considered minors, pairs trades, can be very consistent and calm, which is really, that's what you want as a trader and an investor. So, it's I mean, that is really the name of the game at this point, to understand how to utilize it like that. Let me think. So, what else can we say about this? Let's see. I was closing positions ahead of the news. Yeah, we have news out this morning too, don't we? Yeah, that makes sense. You don't need. People think that you should walk into volatility. No, you should trade after the volatility. Exactly. It is. It's very hard. Options and binaries are for volatility, but when it comes to actual scalping, what do you call it? Individual pairs, you don't want to be in the position because what will happen is you get stopped out. Next thing you know, a minute later, it's making the money that you wanted to make in it, but you got stopped out. That's why you can only trade them through binaries and options through volatility. Yeah, that's the name of the game there. Well, it looks like we had a good day here today for starting off as a disaster. The only thing I have to do now is get my spreadsheets up, the fact check spreadsheet, and we'll be cooking with gas. Indeed. Let's see, what else can we say about any of that? I guess that's about it at the moment. And so from there, let's see, what else is anybody saying here? Volatility, we've explained that. What else can I say about any of these things here? And well, you know what we'll try to do? We'll try to find some of those other slower pairs trades too. I think the NASCAD is another one. Let me just take a quick look before we leave. The NASCAD, the Kiwi basically, right there. Another one of those. Now it got a little choppy in here at times. You see that? And then we went into a sell there. But it gave you, in this case here, let's see, what is it? It went into the buy there, it went into the sell there. Let's widen that out. And then it goes into the sell there. And it stays in the sell all the way up to here. So it goes into the sell there. It's kind of sloppy on that one. Then it goes back into the buy right there. Goes back into the sell right there, and then you get a wonderful little move out of that. Same situation here. Goes into a buy for a couple of days right there, going through the line. You can grab one of these and just move it over like that. And then due to the fact that we're in a sell right here, we can grab that and move that over like that. And we go into a sell. Let's grab this. Let's just generate one right there like that. You can see here that's another wonderful little trade, when you combine the two concepts together. So EWZ, let's do that on the way out the door. All right, let's see, where is it at? Let's minimize that. And then also at the same time, this is the fact check spreadsheet. We'll get that running beta tomorrow. Right there, there's the fact check spreadsheet. Let's take a look at EWZ. And that's the Brazilian product. Let's see, where's it at? Right there. And there's EWZ. Let's see, EWZ. Right there, there it is. You see, we went to a buy right here. What was that? 5 days back. And we're in a weekly buy since here. We went to the buy here. Let's put that in there too. There we go. And it cruised along, bounced off the zero line right there. See the zero line? Bounced off it there, and now it's back into the groove again. Went into a daily buy right there again. There we are. Here's the EWZ. See what this thing was. Look at that. Look how long it was in that sell. Went into a sell back in July and stayed in a weekly downtrend all the way to basically where? All the way to here. Right up to here. And now you're starting to get a little upwardly momentum. Hey, Robin, we got it running. I was dancing. Oh my God, I was dancing like a monkey on a hot roof. I was dancing. All right, this is Doc from North America. We will catch you all tomorrow. Monday. TGIF. Thank goodness it's Friday. We'll catch you on TGIM. Thank goodness it'll be Monday. So this is Doc from North America saying arrivederci. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Ta-ta. Have a safe and smart weekend, traders.